global equity markets and the domestic equity markets performed really well over the last 12 months. And this was surprising because we saw very weak economic conditions over that period. Indeed, over the last 12 months, the outlook for the global economy deteriorated. But as we ended the period, we saw some good news come through, and the indicators are that we're going to go into a stronger economic period. I think equity markets, and including the Australian equity market, will continue to perform for a number of reasons. One, I think money will move out of fixed interest into equities, including Australian equities. I think the outlook for resources will be better going forward, and they have been seriously beaten up over the last year or two, so money will go into resources. And I think money will go into the cyclical parts of our economy where they were going into the defensive parts last year. So the rotation will mean it's possible for our market to continue to go up, notwithstanding that it's at reasonably priced levels at the moment. Confidence is enormously important for equity markets, and that confidence can come about because of a number of factors. And I think the election will clearly underpin a stronger confidence in the Australian economy. That will make consumers more comfortable spending, it will make businesses more comfortable hiring, and those two things feed on themselves. So I think the election result being a clear victory rather than a hung parliament, and the clarity of that result will underpin stronger business and consumer confidence, which is good for the economy and good for equity markets. There are a number of things that shaped equity markets over the last 12 months, but two important events were the ECB taking tail risk off the table. I think that's underestimated, but it was hugely important when Mario Draghi said, "We'll do whatever it takes to resolve the problems of Europe." That took tail risk off the table. In addition, the Fed put a lot of money into the system with QE3. Those two things in concert drove the hunt for yield and were hugely important in underpinning the rally in equity markets. I think when we look at the Australian equity market, we have to think first of all what's happening in the global economy. And the indicators over the last couple of months are that the global economy is finally getting traction, that we're starting to see a synchronised recovery in the global economy. And that's hugely important for equity markets around the world. And it's very important for a trading nation like Australia, which depends on global growth. So I think the pickup in global growth will support a better tone in our market. It will support the resources sector. It will support a number of cyclical companies that have performed rather poorly in the environment where yield and defensiveness was important. So I think the outlook for our market will be for continued improvement, particularly as funds flow out of fixed interest into the equity market.